Hello and welcome to the Rask Network. What you're about to hear and see is limited to general financial information only. Please be sure to speak to your financial planner or refer to our financial services guide available at rask.com.au/FSG before acting on the information.
Hello and welcome back to the Australian Finance Podcast. I'm your host, Kate Campbell, and today I'm here with my Brain Hacks co-host, Evan Lucas.
Hey, Kate. We're up to episode 12.
I know. We have been doing Brain Hacks episodes for quite a while now.
Yeah, and so that means you possibly like it out there. So with that in mind, don't forget, please get on the internet, get out your whatever device you need to is send in the questions to the guys here at Rask. We would love your questions because we are trying to get more and more of these episodes around your questions, which brings us to today. We're not necessarily going on questions, but on certain themes that have come out, I would say, from people listening in, and that is around rational decision-making. And you and I have spoken about this a lot. Rational is not a term that we like on this podcast because rational invokes the opposite, which is irrational. And
no one wants to be called irrational.
Yeah, and you and I hate that term because being irrational is not a fair concept, particularly when it comes to economics and finance. Rational v irrational thinking, I think, is a very unfair term. And I know you and I spoke about this before, and I'm going to say it again. We think the opposite of rational in finance is reasonable.
And that's why it's called personal finance, because so much of it comes back to who we are, how we grew up, the people we're surrounded with, the place we were born, the people we were born to. So it's not about just the numbers on a spreadsheet. And a decision might look fantastic on a spreadsheet, but it might not work in reality for you in your situation.
Yeah, and that gets down to theory, right? So all of this comes back to this idea of economic theory about time that we talk about a lot, not just in the Australian Finance Podcast, but across our spectrum, and the amount of time in market. Therefore, you should use that to your advantage. Now, economic rationalism from the 1850s, 60s talks about the word that we all don't like to use in this, which is leverage. Right. So economic rationalism says that if you've got 30 years, the rational economic argument is to actually go up by 2.1 to 2.5 times. Immediately, that should put alarm bells going. Why would I want to leverage myself on that kind of investing? There's risk involved, blah, blah, blah. But a computer program and a robot, an economic rationalist, will justify that. That's not what reasonable thinking is. Right?
No, because a computer program can play out for a 30-year simulation, but it doesn't take into account that we are getting married, we're traveling overseas, we're losing our job, we're starting a family, we're doing all sorts of things, we're changing careers.
Yeah, we have a COVID, we have a GFC, we have all of those things in between. Not only that, the other thing it doesn't take into consideration that is also going to be part of today's talk, which gets into the next part of it, is additional frameworks that are put onto it. Ethics. Right. So this is what we're also talking about with all of these things. Realistically, it's now been boiled down to this term, ethics, ethical decision making. Is your economic rational decision making actually hurting? Because that's the term, hurting others. And it can, because again, if you start thinking on a full economic rationalism, the concept is also outperforming, beating, taking from other areas or other asset classes. That's owned by other people. That is run by other people. So there's an ethics to that comment as well. So we really hope you like this one. It's going to be a little bit more sort of what we're going to call it, sort of slightly more theoretical, strategic in terms of it. But we think it's really important to really discuss this because, as Kate's already made it abundantly clear, fantastically so, the personal decision-making that you have, that is the most important thing that you'll come back to constantly, time and time again. Reasonable decision-making is going to be the right answer, even though it may actually be for your investment decision, possibly not to its most highest potential, I think is the best way to say it to you, because the reasonable decision is, I've got kids. I've got a whole lot to do for. I've got a life to live. That, I think, is also the important thing here. Don't forget, your money is there for you. It's not there for itself. And it's there to make you the money that you want for the lifestyle and the decisions that you want to make. That's reasonable. That's not rational, but it's reasonable.
I want to sidebar slightly, Evan, because when I was at the Melbourne Writers' Festival recently, I heard a talk from a philosopher from the UK, A.C. Grayling, and he was talking about the meaning of ethics and what that means to us, because we often talk about ethics and ethical investing like it is one thing in finance. It's we're going to exclude these companies. But he was saying that the word ethics actually comes from the Greek word ethos, which means character. And it's about an internal examination of ourself and our values and how we want to live our life, which I think is much more interesting concept to explore. It means it's very unique and individual and that there's never going to be a one-size-fits-all ETF that you can invest in that is ethical to you, but it also is an interesting way to explore how do I want to invest? How do I want to use my money to create the future that I want? Because at the end of the day, it's what is ethical to me is going to be different for every single person if we go off that word of who am I, what are my values, how do I want to live?
Yeah. And so I find that concept now becoming much more the norm in terms of how things are using it. Because again, I think we sometimes forget that that's sort of what we're trying to get towards. And so I don't just talk, like the one that I sort of have seen a lot of lately is a guy named Thomas Sowell. He's one of the most celebrated and also despised American philosophers out there because he's really quite strong with his views. But he has some incredible things because he makes you think. And it's exactly the same as what you've just been discussing there, which is one of the ones that he talks about is that there are no solutions. There are only trade-offs. And I think that's also part of this whole discussion about ethics and about your biases, what your ethics are, how they are. That's the thing. I think what's also started to come about is that everything has and should have a solution. Solution has a finite sort of connotation. This is the right answer. And it's not. It's trade-offs, right? It's trade-offs. And that's what, Sewell talks about. Human progress slows cause. We get fixated on the perfect solution when there is none. Because that's the other thing I know you love talking about, which is analysis paralysis. It's the same concept. So solve the problem with trade-offs. Actually gets you to do action. So ethics is a great framework, but again, it can also cause that idea of A, analysis paralysis, and B, searching for the perfect solution. It also suggests perfect equality. Now, I would argue, and this is where I get in trouble, but equality is allowing everybody to do their own thing. Some people would argue equality is even for all. Now, even for all in itself is also a rational argument. It's not a reasonable one. And I know that's hard, and why are we talking about this in finance? But again, those people that want to absolutely make money constantly over and over and over, that's fine because that's their rationality. That's their reasonable decision-making. But it's not necessarily what you want to do, and that's reasonable too. But that, as I said, when it comes to that equality, some people would argue that's not fair. It is fair. That's their decision. It's not yours, and that doesn't have to be yours. Don't then use the other thing that you and I have spoken about with this, which gets back to ethics, gets back to rational decision-making and reasonable decision-making. Don't let biases come in. And that bias that I'm alluding to there is envy, right? This is what we're getting back to is envy is also part of this. And that's where bad decision-making can happen, where reasonable decision-making does go over that word that I like to use, being reasonable, into the irrational, because you're not actually making reasonable decisions. You're being influenced by other things to create, unfortunately, bad decisions, which are probably more likely to be irrational to your need and your want with what your money is going to be.
So if we think about why rationalisation, which might be us trying to come up with reasons we made a decision after we did, why might that be harmful with our finances?
Again, rationalisation allows personal perception, allows personal understanding, allows biases, allows groupthink, all those kinds of things to actually justify something rationally, right? So no matter how hard we try, and I will put my hand up, and I know you do as well, that as neutral as we try and sit, as uninfluenced as we try and perceive ourselves to be, we are. And that is the first part of the acceptance of this. So all rational decision-making, even those that use theory, even those that use all of the maths and science that they can, still have a bias inside it. I mean, even AI is telling you right now, AI has biases because it's learning off you and me. And therefore, we're human beings. We naturally have biases. So there is no, in my argument, and this is what we're alluding to here, there is no necessary rational scenario because rational argument has biases innately built into it. And that's, again, why I don't like that term. I want reasonable decision-making because then you can accept all of those things I just said against rational, which is that Yeah, I have biases. Yeah, I have views. Yes, I have a perception and I have that. I accept them. I know how I can get around them. I can help myself with having automation or additional information in there, a group of views, not basically thinking I'm the best at it. I need to understand that I don't know everything. In fact, I know very little, but that's fine. I can get enough information to make a reasonable decision with my money.
Should we talk about some of the rationalizations that people use a lot?
Yeah, go on. You go first.
Well,
because I know this is something that you love. So I know. Yeah, I know. I've been talking a lot. You go.
Well, one is called denial of injury, which is the idea of, yeah, I probably shouldn't do this, but no one's really been hurt.
Yeah. And that's what we were talking about before, which is rationalism sort of does that tit for tat, you know, me versus that, mine versus yours. And that's, again, this is the ethic question that comes into it, is that human beings, majority of us, don't like to hurt each other, don't like to create injury. And if you already know that the decision you're making could hurt, the invisible person is real. And I think that also needs to come back to the conclusion here, which is that the invisible person is real. White collar fraud is called that for a reason.
I was just thinking of insider trading
correct.
Right now, because a lot of people do justify it that it's not really hurting someone, or it's only hurting investors. It's not hurting people that...
Well, let's use GameStop.
Yeah.
Right. So GameStop's back in the media. It's so much so that...
Again?
Yes. So if you haven't seen it, E-Trade in the States is actually thinking of banning a certain individual who posted on social media that they had a huge, and I mean ginormous, position in GameStop. Now that is market manipulation, if you want to sort of call it out for what it is. That person would exactly fall into this. They're not believing that they're hurting anybody. But when you are on a market, somebody buys, somebody has to sell, right? So somebody's missing out. Somebody is sold out to you to have that position. And therefore, the money that person's making, which is in hundreds of millions of dollars, there has been not just one, but lots of individuals, institutions that have been financially injured by that decision-making. Or go back to 2021 when it first happened, the reason for GameStop was lost. It was just the euphoric movement of it. And this, we've talked about this in other ones, but attention bias, confirmation bias, obeyability bias, they all fall into this as well. But there's an ethical framework behind it that has blurred reasonable decision-making, because you then have everybody doing it. But again, you forget a market, as I said, it's like going just down to any market. Somebody's selling you a good and there's a price for it. Somebody's giving you a price in a market on the exchange for a price to sell it at. Somebody's making money and somebody's not. So there is always injury when it comes to that, even if they're invisible. So insider trading is a perfect example.
One of the others is social weighting, which is the idea that I know I shouldn't do this, but other people are doing things that are even worse. And so we might use that in business or in our personal lives when we're making decisions to rationalize them and say, okay, it's not really that bad what I'm doing.
Mm-hmm. Again, denial, right? So the word there is social weighting, but it's all falling under the idea that this isn't that bad. Denial is the root cause of all of this. It is, again, a bias. We all know we have it. We all know it exists. How do you get around it? Again, gets back to that ethics question. It gets back to that whole concept of the rationalization of what you do is it hurting somebody? Yes or no, but I can't see them. So therefore, out of sight, out of mind. It's those old studies that they used to do back in the 60s about getting a participant to actually possibly electrocute somebody. That wasn't actually happening, but they couldn't see them. And they got to a level so high that they actually would have been enough electrical shock to kill them. When they actually saw the person, they wouldn't do it. So this is the new world that we're also in, is that with online transacting for your investment or whatever finance that you're doing, because you can't see the person, that social weighting is so much easier. That denial of injury is so much easier to do. And just because somebody else is doing it does not justify you. I mean, again, that's the argument of the mob, right? That is a mob argument. Everybody else was doing it, so should I. That is never a right argument.
The other one that interests me is the idea of being objective, and whether that's thinking we can be objective about our own finances or our friends, or working with a financial advisor, we might think they can be entirely objective because they're a third party, but objectivity is very hard because money is attached to emotions, it's attached to our life story, it's attached to goals and all sorts of different feelings. And can we ever truly be objective about our own finances?
I think your question's the answer, isn't it?
Yeah.
Like, because again, objectives are subjective. Wow, try and say that quickly. Because again, as you said, like, financial advisors, they are there for the right reasons. And again, it's not a great analogy, but I'm going to do it. Politicians go into politics for the right reasons, but the population's view of them is very different to what they do it for. All politicians of all persuasions and stripes, colours and whatever else, creed, blah, 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 go into politics for what they believe is objectively the right reasons, but they have subjective problems behind it. Financial advisors, their objectives to help you are to get you to financial, stability or financial freedom or whatever term you want to use. But also their objective, they get remunerated by you coming to see them. And the more interaction you have with them, with the more advice they're giving you, therefore the more cost they're getting. So there's always that.
But that's the challenge of any service.
That's correct, provider. Right? So that's the ethical.
Like a plumber.
Correct. So the plumber is there to change your tap. Whether they change it well or not is again a subjective thing, or the objective of what you're doing. And so you're exactly right. This is why legislation, policy, theory, rationalism, and let's just call it what it is, real world, don't necessarily, in fact, they don't ever meet because, and to some extent, they're almost polar opposites because in the real world, the variables are infinite.
Yeah. And
because the variables are infinite, you can't actually get them all meeting up at once. You can get them close, and there's frameworks for that to get them close. And I think that's the answer, and that's what we've come to as a society and as a globe, but they don't meet.
Yeah, and there's this idea that we can mitigate every conflict of interest in finance and avoid them because that will lead to better outcomes. But that really doesn't take into consideration that conflicts are a lot more than just financial remuneration. They could also be friendships, they could be networks, they could be relationships. Like there's all these other things that can cause us to be conflicted.
Yeah, and so that's a good one. So everyone's somewhat okay with networking, right? Because that's exactly what you just talked about, right? So networking to get more business or a new job or a new that's seen as the right thing to do. But then there would be an argument to otherwise is that there is an invisible injury here, that the right candidate for that job or for that what have you has been left by the wayside because of the network that you have and the relationship that you have that overrides the inverted commas correct sort of structure to hiring somebody or joining something or remunerating something. So this is all part of it. Again, that's openly accepted as not an ethical problem. But when you put it like that, you could make the argument that actually it is an ethical problem because the right situation, answer, candidate, whatever it is, has actually been left by the wayside because of the bias of having a network and the bias of having a relationship.
So I think really what we can do as investors is we just have to be aware that there are conflicts everywhere. We're conflicted, our friends are conflicted, the people we deal with, the places we buy our investments are conflicted in ways because maybe they're a broker that wants you to make more investments. Maybe they're a friend that wants you to act in a particular way. So there's always conflicts there. But if you just are aware a little bit more of what they are and how they're incentivizing you to act in different ways, then we can make slightly better decisions.
Yeah, and that I think that's the thing is that we got back to that concept that I said from Thomas Sowell, which is that there are trade-offs. There's not a perfect solution. Human beings, particularly now, are really taught to this idea of finding the right answer. And again, the only thing I would argue that is right is mathematics because mathematics has hard and fast answers. Pretty much everything else has interpretations. So there isn't a solution. There are trade-offs. And I think that sort of gets back to it. Sort of moving on, just sort of going through to the final parts of what we're now talking about is we've talked about it doesn't hurt anyone. Everyone's doing it. It's okay if I don't gain personally. I think that's the next thing to finish this up because this is a personal finance podcast. At what point does it go and blur from being okay to not okay if you're not gaining personally? Tough question. I get that. But the reason I ask that is that it shows, therefore, that improper conduct can actually become justified. So I'm not gaining from this, but somebody else is. I'm not gaining, but I'm actually creating basically a jolt in the system, a fold in the overall scenario. It's the way that I would look at that personally, in terms of I'm not gaining personally, but if you were to, again, go back to things like insider trading, that isn't seen as insider trading. And what I mean by that, I know some information that I'm not going to get personally a kick out of, but I might transfer it to you.
Mm. Well, you're gaining something. You're gaining a favour. You're gaining their appreciation.
So what we've come back to with this is that idea of, again, all of this folds into ethics. All of this folds into reasonable decision-making and what reasonable is to you. Because, again, deep down, we have a bias that realistically now falls under an ethics. We know right from wrong, inverted commas. We know what is seen as the right thing and the wrong thing to do. We know what creates injury and what doesn't. So I find that next step, the thing that's starting to come out, is that I want to help my friends. I want to help my family. I want to help the work or institution I work for, and therefore being able to overlook that it's okay because I'm not gaining. Yes, you are. You are gaining.
Decisions always have another side to them.
Yeah, correct. And I think when you're doing your finances out there and looking at it from that perspective, that's the thing to finish off with regards to this talk, which is, in the end, you will know the reasonable decision. Your internal monologue, your internal ethics, your internal biases will make you go, hang on, although I can't see the person, or I don't think I'm benefiting from this, or I don't think it's the wrong thing to do, if that little beacon light, whatever sort of thing you want to say, goes off, why? And I think that's the answer to this as well. Why is it going off? Something is telling you something's not necessarily fair, reasonable, or real. And for that reason, that I think is how you get around it, is that listen to yourself, that ping.
Yeah. And write down why you're making decisions. I think that's a really powerful process, whether it's journaling, a Google Doc where you're recording your investments, that allows you to interrogate the why behind your decisions. And so you can find out, am I rationalizing things?
Mm-hmm. Kate, thank you as always for having me on. I love doing these.
Thank you very much, Evan. We'll have links in the show notes. We'll have a link that if you want to send us any questions for a future Brain Hacks episode, you can, and you can catch Evan online as well.
Yeah. Cheers, guys.
Wonderful. Thanks for listening, everyone.
Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.